few options for your YouTube intro. Choose the one that best fits your style. Option 1, Direct and Enthusiastic. Hey Forex traders! Welcome back to Forex Scope, where we dive deep into the markets to bring you clarity. Today, we're breaking down EURGBP on the 15-minute and 1-minute charts to pinpoint those crucial trading opportunities. If you're looking for actionable insights and a clear path forward, you're in the right place. Don't forget to hit that subscribe button and the notification bell so you never miss an update. Let's get started. Option 2, Friendly and Engaging. What's up, everyone, and welcome to another Forex Scope analysis. It's great to have you here. Today, we're putting EURGBP under the microscope, focusing on the fast-paced action of the 15-minute and 1-minute timeframes. We'll be looking for those key support and resistance levels and potential moves. If you're serious about improving your Forex trading, make sure to subscribe. It's the best way to stay ahead of the curve. Ready to explore the charts? Let's go! Option 3, Concise and Professional. Greetings, traders, and welcome to Forex Scope. Today's video focuses on a detailed analysis of EURGBP, utilizing both the 15-minute and 1-minute timeframes to identify short-term trading signals and future price trends. For consistent market insights and trading guidance, please consider subscribing to the channel. Now, let's jump into the EURGBP analysis. The support zone is identified between the timestamps 176-293-3500 and 176-293-7100, encompassing the price range from approximately 0.88102 to 0.88156. This area shows clear signs of price consolidation in multiple touches, particularly around the 0.88150 to 0.88160 level, which acted as a floor for several candles. Specifically, the candle closing at 176-293-3500, 8 hours and 45 minutes, and the one opening at 176-293-7100, 8 hours and 45 minutes, show a period of indecision and multiple attempts to break lower, with the price repeatedly finding buyers in this vicinity. The preceding candles also exhibit significant lower wicks touching or nearing this lower bound, indicating buying pressure. This sustained interaction suggests a strong psychological level where demand outweighs supply, leading to price bounces. The confluence of these price actions, including the sideways movement and the formation of these lower shadows, validates this as a robust support area. The range of prices observed during these touches, from around 0.88102 to 0.88156, further solidifies this zone as a significant area of demand that has historically halted downward price movements. The significant volume observed during some of these touches also reinforces the importance of this price level. The area around 0.88150 has been tested multiple times, creating a foundation for potential price reversals. The resistance zone is identified between the timestamps 176-295-7800 and 176-296-3200, covering the price range from approximately 0.88286 to 0.88375. This period shows strong selling pressure and the formation of significant upper wicks, indicating that attempts to push prices higher were met with considerable resistance. The candle closing at 176-295-7800, 14 hours and 30 minutes, and the subsequent candles, particularly the one ending at 176-296-3200, 16 hours, exhibit multiple price rejections around the 0.88350 to 0.88375 level. The high prices reached during these candles were consistently followed by a retreat, signifying that sellers were actively defending this upper boundary. The presence of large bearish candles or candles with long upper shadows within this timeframe further emphasizes the strong selling sentiment. This repeated inability to sustain higher prices points to a significant supply zone where sellers are more dominant than buyers. The price action within this range, characterized by these rejections and the lack of sustained upward momentum, defines this as a critical resistance area. The interaction with this price level, from around 0.88286 to 0.88375, has historically capped upward price movements. The high volume observed during these price rejection periods also adds to the significance of this resistance. The area around 0.88350 has been a point of contention, where the price struggled to break higher. The resistance zone is identified between the prices of 0.88219 and 0.88224. This area shows a clear price reaction where the market struggled to move higher on multiple occasions. Specifically, the candle at timestamp 176-304-8700 with a high of 0.88224 and a low of 0.88216, followed by the candle at timestamp 176-304-8760 with a high of 0.88229 and a low of 0.88214, indicates strong selling pressure encountered at these levels. The subsequent price action around timestamp 176-304-8820, with an open of 0.88214 and a close of 0.88219, further reinforces this level as a point of significant overhead supply. This period of indecision and rejection from higher prices suggests that this price range acted as a ceiling for the EUR-GBP pair, demonstrating a notable accumulation of selling orders. The repeated testing and failure to break through this price band highlight its significance as a resistance. The support zone is located between the prices of 0.88187 and 0.88196. This area demonstrates clear support with multiple touches and a period of consolidation, indicating strong buying interest. The candle at timestamp 176-304-9480, with an open of 0.88190 and a close of 0.88187 and a low of 0.88187, shows initial rejection of lower prices. Following this, the candle at timestamp 176-304-9540, with an open of 0.88187 and a close of 0.88181, also tested these lower bounds before a bounce. The period around timestamp 176-304-9600, with an open of 0.88180 and a close of 0.88176, also shows that the price found buying interest at these levels, preventing a further significant drop. The subsequent recovery seen in the following candles suggests that this price range was a crucial floor where buyers stepped in, leading to a period of sideways movement or accumulation before potential upward price discovery. This price action confirms the significance of this support level. The recent price action on the EURGBP 1-minute chart shows a period of consolidation within a tight range, hovering around the 0.88200 level. The previous 15-minute analysis identified a strong support at 0.88185 to 0.88140 and a resistance at 0.88390 to 0.88336, indicating a broader sideways movement. Currently, the price is trading near the middle of this established range. The Fibonacci levels provided suggest a potential retracement or continuation, with the current price situated between the 0.88180 and 0.88247 marks. The Bollinger Bands on the 1-minute chart are relatively narrow, implying low volatility and a potential for a breakout soon. However, the immediate price prediction will focus on a zigzag pattern within this current range, reflecting the lack of strong directional conviction. The price is expected to test the lower end of the Bollinger Bands in the short-term support zone around 0.88190 to 0.88195, given the slightly bearish lean of the last few candles and the lower volume in the immediate past. Following this, a bounce is anticipated, pushing the price back towards the middle of the range, potentially testing the middle Bollinger Band. A subsequent dip is likely as sellers might re-enter near the upper half of the current trading zone. The final predicted move within this short time frame is another test of the lower boundary, consolidating the price action before any significant directional move occurs, driven by upcoming news or a shift in market sentiment. The overall market structure points towards a period of observation before a decisive trend emerges.